Welcome to the deep dive. Today we're taking a closer look at Toast's first quarter results for 2025. That's ticker TOST.
Right, the restaurant tech platform. We're looking at whether their business is, as good as their software seems to be for restaurants.
Exactly. So what are we working with?
We've got Toast's official Q1 press release, that's from May 8th, and also a market beat piece covering the same report, same date.
Okay. And the mission.
To really pull out the key takeaways, what you need to know about how Toast is doing right now, where they're headed. Simple as that.
All right, let's dive in. First impressions. I mean, Q1 looks pretty strong, right?
Oh, absolutely. The headline numbers are quite striking. They added over 6,000 net new locations just in Q1.
6,000. That's quite a clip.
It is, and that feeds into their recurring revenue, their ARR. That grew 31% year over year.
Okay, so ARR, annualized recurring run rate, hit what, $1.7 billion?
Yep, $1.7 billion as of the end of March. That's, a solid base of predictable income, shows customers are sticking around.
Sticking around and maybe spending more. But the big story seems to be profit, right? A net income.
That's the real head turner. $56 million in net income for Q1. Compare that to last year, Q1 2024.
They lost money then, do they?
Big time. An $83 million net loss. So flipping that to a $56 million profit is, it's huge.
That's a massive swing. What's driving that? Just more revenue, or are they getting leaner?
It feels like both. Definitely scale helps, but it's just, better cost management, more efficiency kicking in. Those earlier investments are paying off.
Makes sense. And we see that in other profit metrics too, like Adjusted EBITDA.
Exactly. Adjusted EBITDA was $133 million last year, same quarter, $57 million, so more than doubled.
Okay. And the profit they make on their core recurring services.
That's looking good too. Recurring gross profit streams up 37% year over year, so the core engine is really humming.
Right. So it's more locations, and the locations they have are generating more profitable revenue. What's behind that growth? Anything specific jump out?
Well, the CEO, Aman Narang, pointed to strengthen their main business, of course, but also getting traction in newer areas.
Like what?
Things like international markets, retail, and importantly, landing bigger enterprise deals.
Ah, yes. I saw the Applebee's mentioned. That's a big one.
Huge. They called it their largest deal ever. And Topgolf, too. Getting those kinds of names shows they can handle scale.
Definitely adds credibility. So overall locations are up quite a bit year over year.
Yeah, up 25%. They're at about 140,000 locations using Toast now.
Wow. Okay. And more locations, more payments flowing through. What did the gross payment volume, the GPV, look like?
GPV saw solid growth, too, up 22% year over year, hit $42.2 billion in the quarter. That's a lot of transactions.
$42 billion. And that volume, that drives their fintech side, right?
Yeah.
Their payment processing revenue.
Precisely. And the profit from that and their subscriptions looked good. GAAP gross profit up 35%, non-GAAP up 37%.
Okay, remind us quickly GAAP versus non-GAAP.
Sure. GAAP is the standard accounting rules. Non-GAAP lets companies adjust those numbers, maybe pull out stock compensation or one-off costs to give what they see as a clearer view of core operations, both moving strongly upwards here.
Got it. And the overall operations profitability, the GAAP income from operations.
Another big turnaround story there. Went from a $56 million loss last year to a $43 million profit this Q1.
Again, showing that efficiency improvement.
Exactly. And it flows through to cash. They generated cash from operations, $79 million, versus burning through $20 million last year.
And free cash flow, the cash left after investments.
Also flipped positive, $69 million in positive free cash flow compared to negative $33 million a year ago. Really healthy signs for the business fundamentals.
Okay, very clear improvement there. Now, you mentioned something earlier, ToastIQ. What's that about? Sounds like AI.
It is. It's basically an intelligence layer they're building on top of all the data they collect. Millions of transactions, 140,000 restaurants. That's a ton of data.
So they're trying to make that data useful for the restaurants themselves.
That's the idea. Turn insights from that data into actual tools, like helping restaurants run better.
Okay, like what kind of tools? Give me an example.
Well, they mentioned a few initial features. Menu upsells, maybe suggesting profitable items for servers to push. Shift at a glance for managers to handle staffing better.
Okay. Practical stuff.
Yeah, and digital chits, maybe to streamline orders. Plus, they're talking about AI for marketing, helping restaurants find new customers and keep them loyal.
Interesting. So moving beyond just payments and POS into more operational intelligence, that makes the platform stickier, I imagine.
That's likely the goal. Make Toast indispensable, part of the restaurant's brain, not just its wallet.
Right. Okay, so strong Q1, New AI features?
Yeah.
What about the outlook? What are they predicting for Q2 and the rest of 2025?
For Q2, they're expecting that non-GAAP gross profit from subscriptions and fintech to land between $435 and $445 million.
And how does that compare growth-wise?
That's projecting 26% to 29% growth year over year. So still very strong growth expected.
Okay. And profitability for Q2, Adjusted EBITDA.
They're guiding for $130 million to $140 million there. So maintaining that level we saw in Q1 basically looks sustainable.
And they updated the full year guidance too, right? Raised it.
They did. For the full year 2025, they bumped up the forecast for that non-GAAP subscription and fintech gross profit, now expecting $1.775 billion to $1.795 billion.
What kind of growth rate now?
That implies 25% to 27% growth for the full year, up from their previous forecast of 23% to 25%. So they're feeling more confident.
Okay, higher confidence on the profit line. What about Adjusted EBITDA for the full year?
Also raised, now expecting $540 million to $560 million, up from the prior range of $510 million to $530 million.
So across the board, better performance in Q1 leading to a stronger outlook for the whole year.
Pretty much, yeah. All signals seem positive based on these results and forecasts.
Were there any other sort of housekeeping items in the release?
A couple of things. They closed a bigger revolving credit facility, $350 million now. Gives them more financial flexibility.
Always good to have.
Yep. And just a note for investors, they highlighted using their IR website and newsroom for future disclosures. Standard stuff.
And the usual caution about forward-looking statements being subject to risk.
Of course. Always got to have that reminder. These are projections, not guarantees. Things can change.
Right. Did the market beat piece add anything else, like analyst expectations?
It mentioned a consensus analyst estimate for Q1 EPS was about $0.19 and revenue around $1.35 billion. The sources we had didn't directly compare Toast's actuals to those estimates, though. Would have been interesting to see the beat or miss there.
Yeah, too bad. Okay, so let's try and wrap this up. Key takeaways.
Well, I mean, strong Q1 is the headline.
Yeah.
Really strong. Growth in locations, growth in recurring revenue.
And that big swing to profitability, both net income and Adjusted EBITDA. That seems critical.
Absolutely critical. Plus the introduction of ToastIQ, leveraging their data with AI, seems like a smart strategic play for the future, making them more valuable to restaurants.
And the raised guidance for the rest of 2025 suggests they think this momentum isn't just a blip.
Exactly. It paints a picture of a company hitting its stride, growing fast, but also getting much more efficient.
So, thinking ahead, with Toast getting bigger, smarter with things like ToastIQ, it really makes you wonder, doesn't it? How is this going to change the restaurant game?
Right. For owners, for staff, even for us as diners, what does a restaurant powered by this kind of integrated tech actually feel like in, say, 5 years?
Yeah, and what other tech might become totally essential for restaurants to survive and thrive?
Yeah.
Beyond just the POS system. Lots to chew on there.
Definitely. Toast is certainly one to watch as that future unfolds. They seem well positioned.